Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is Friday, June 11th, 2010, and like we do every night, we got another free alert for you. Check this out. If you've been watching our free nightly market analysis at PerfectStockAlert.com or via our YouTube channel, it's always free. It's always every night after each close. We give an analysis, let you know what's really going on in the market, and we're dead on accurate, so you don't want to miss it. And all we ask in return is you refer a friend. Pretty simple, okay? Uh, if you've been watching that, you know that we are bearish on this market, and we believe that this bounce up here is an opportunity to be adding to your short positions. If you watch today's market analysis, it's going to come out on Friday. We eliminate all doubt of that. Okay, so you definitely want to check that out. Now, what we'll be doing here is this is a ticker symbol GLW, Corning Incorporated. We want to be entering a short here at 14, 18 or higher. You'll notice you've got multiple lines of resistance here. You've got the upper Bollinger Band line, this green line right here. That's your upper Bollinger Band line, and it's going to act as resistance. You've also got the 50-day moving average is acting as resistance, and this 1876 level, that's also a resistance line right there. Okay, you'll notice today's high could not pierce that 1876 level. It was a high of 1868. Now, here's something to know about resistance and support lines. You see guys draw them all the time. What's it mean to you? Well, it acts as resistance, but it doesn't have to stop there. So what actually, there's two case scenarios here. Either it will not break out of here, and if it doesn't, that's very bearish, uh, or it will. And if it does, it's not a big deal because typically they'll break out of one and then fail at the second. The same thing happens when they're going lower. They'll break the first one, but not be able to break the second one, which is back here. You can't quite see it, but either way, um, they'll break one at a time. Okay, so if she moves up here beyond this 1876, I just add to the short. My stop would be 21.05, 1 cent above this previous high right here. Okay, so that's how I'm going to play that. You'll notice the slow stotch. You've got it coming near the overbought at 80 or higher, and that'll probably tick up there completely overbought on Monday of next week. So we're looking for that. And a lot of times when you have kind of stuff like this, you'll gap up the following day, just kind of trade within that range. So that would actually be the peaking point, so to speak. Or you could make break out of it, and then you'd be well above the upper Bollinger Band line and extremely overbought, and you'd just be shorting that guy. Okay. In every case, you short it. Why? Because you've got gaps, lots of them. You've got one here, you've got one here, you've got one here. All this tells you that this big bounce here is based on oversold conditions. Euphoria is set in. People are buying it up really quick, but it's not going to be sustainable when that market pulls back down, which is coming. All right. How would you stop? I mean, where would you exit the guy out of this? We already said we'd put a stop up here at 21. So where would you exit? On the exit, you've got multiple options. You can either wait for the 20 line to get hit down here, wait for these two lines to come back down and hit the 20 line like they did back here, like they did back here. All right. So if you've been shorting up here, then you'd cover down here. All right. If you short once it gets up there, you cover once it gets down here. Okay. That kind of stuff. Right there. In this case, it's the same situation. Another method would be to wait for price, the candlestick activity, to come back down and touch the lower Bollinger Band line, this green line. Okay, that's the lower Bollinger Band line. When price runs back down and touches that, it'd be a way out. Another method would be to exit when it hits the middle Bollinger Band line. Just depending on whether you're a short-term trader or more of a swing trader like I am. That's just how you change that up. Another method you could use is simply wait for the gap to fill here, or wait for the gap to fill here, here. Okay, you can use any of these methods. All right, awesome. In any case, whatever you do, as soon as it starts to move in your favor and you're up showing a gain, take your stop loss limit that's up here and move it down to lock in a gain no matter what happens. All right, that's always the safe way to play. Awesome. Enjoy your weekend. Have a look at our disclaimer before we go. Subscribe to our YouTube channel or I'll hit you with a stick or a brick or a banana. And there it is, the disclaimer. Enjoy your weekend. God bless. Thank you for your support.